Hey everybody, hey traders, Chris Pulver here. Welcome to the Weekly Outlook. Let's talk about all things stocks, forex, cryptos for the week of December 7th through the 11th. Important news to highlight this week. We have some COVID vaccines officially hitting Europe. We had a pretty fast approval process in the UK. It did receive some criticism from Dr. Fauci, but it's going into Europe. Parts of Russia, China has already administered vaccines. In the US, it's coming probably in the next couple of weeks. I know that as soon as we have the emergency use authorization for the Pfizer vaccine, it looks like it's ready to be rolled out. So, how is the market taking this? How are they interpreting, COVID optimism despite having crazy COVID cases? Well, I wanted to share an extra slide here for what's important this week. This little list are the important fundamental factors that I'll be following this week. I think these are going to be the biggest drivers of price action, and when price action is moving, that's what provides the opportunity for us to trade. So right now, and I can show you this reflected in a currency strength chart, the European Union and the United Kingdom are at the table right now talking about Brexit agreements, and whether or not it is done this week or it's done at the end of the month, I don't know. This has been an ongoing saga since 2016. It's still not resolved, but the pound crosses this week will most likely see a lot of day-to-day volatility. To take advantage of this, there are two key strategies that I focus on throughout the week for pound crosses. Number one is just a really simple London breakout strategy. We use 1 hour charts, we use 1 hour price, and then we use 5-minute price action for some simple 3 a.m. to 4 a.m. breakouts and see how that early London session, kind of that active zone in the Forex market, starts to provide some breakouts. If we see some decent volatility on the day, which it certainly looks like the pound is very vulnerable to good and bad news. But either way, producing daily trading ranges of, let's say, 100 plus pips means that we have day-to-day opportunities to get some scalping done on these pound crosses. So I will certainly be watching that this week. I'll talk about that all this week in my trading room. We'll set up some really simple trades. Next on the list is the December 11 U.S. government shutdown avoidance. Congress is going to have to do something to avoid a U.S. government shutdown as of Friday. Now, inside of this avoidance is probably coming the Operation Compromise, as I'm calling it, with the COVID stimulus hopes. We're into talks once again between Democrats, Republicans, Congress. Will we have another round of COVID stimulus? Now, again, agreeing to terms have been all over the place. We've had $500 billion from Republicans, $2.2 trillion from Democrats. That's now somewhat finding a compromise to the tune of $900 billion. Now, is it $900 billion just kind of get something out the door, extend some unemployment benefits, aids the state and local governments, in addition to avoiding a government shutdown as of Friday? These are also big factors with why the market refuses to acknowledge that COVID cases are rampant and there are shutdown measures all over the world taking place once again, but it's vaccine hope, it's stimulus hope. The market is building up more gains and rallying to all-time highs on hope. Okay, so bull markets are built on hope. Even euphoria is built on this hope. So what we're noticing in the market as far as directions is, even though last Friday's job report was awful, we expected 400 and some thousand jobs for the U.S. It came in at 200 and some thousand. We have unemployment claims that are still high. We have shutdowns in California, restrictions all over the U.S. right now, restrictions all over the world right now because COVID cases are still getting really bad. But the market doesn't care. The market's like, all right, we'll figure it out. We're going to have spending bills. We're going to have another stimulus. We're going to have vaccines coming out in the next week or 2 or 3. Regardless of logistically who it goes to and who gets it first. But the point is, the market's like, it's all good. We'll figure it out. We'll get through it. Whether or not you agree with that, like I said, I've said this for weeks now. I'm not interested in calling tops. I'm not interested in painting this picture of, I'm calling the top, the market's got a short, it's irrational. Right, but you should know the saying, the market can remain irrational longer than most traders and investors can remain solvent. So I would rather, be cautiously bullish, stay with this current direction, and be braced and prepared and properly hedged for any type of, pending correction. So when we get to the charts, remember, we're going to look at the indices. I will certainly look at the volatility index as well, because there's some really great levels to the upside in case the market throws us for a little loop, or maybe some of this stuff is getting priced in. We're fractionally, marginally clawing out these higher highs. NASDAQ up, 40%, S&P up almost 15%, Dow 6%. Like, from the depths of levels that haven't been seen in, a decade, we're talking about the ability to financially buy our way out of a recession. All right. Now, let's keep going. So December 11th deadline is a big deal. What happens this week between Congress, Can they agree on something to avoid the shutdown? Can they also patch in the stimulus hopes for round two? Probably. I would say, this is the market's way of kind of kicking Congress into overdrive to get something done and don't end the year on, a crappy note. Anyway, next we've got vaccine distribution. It's going throughout Europe right now. Russia, China has already produced the vaccine and have been administering it. The U.S. is probably going to be 1 to 2 weeks behind. Is it going to frontline workers and, patients in the older community, assisted living facilities, things like that? Most likely first, yes. But again, if it's widely available in the next 2 to 4 weeks, I'm sure that's going to relieve some sense. But does a vaccine all of a sudden mean that it's life back to normal? I mean, is everyone going to start signing up for cruises and go on, flights? Probably not. Is everyone returning to movie theaters? Probably not. Are businesses on full recoveries? Probably not. Right? So that's the rational investor. But like I said, I'm cautiously bullish. I'll keep riding out these profits. What I am doing is, thankfully, in your broker platforms, you may have the ability to use trailing stops. If you're up 20, 30, 40, 100+% in some of these stock positions, which this year has been ridiculous, move those stop losses. I have a lot of stop losses that are trailing current price by about 20%. So if I've locked in, crazy gains for the year rather than closing out positions, I just move a stop loss. That way it's taken care of. That way any, scare, that way any increase in volatility, I get the cash, I'll take the profit, and I'll look to invest where I can. Right? Market bulls and bears. Right now the bulls pretty much have control. The bears are not showing any teeth. They are dormant. They are hibernating. The bulls have full control, even though it is barely causing more momentum to the upside. We're still getting. It's easier for the market to just stay where it is. It's either easier for the market to try to build these higher highs, and I expect that to at least stay for the time being, unless there's a massive disappointment on this front. If the COVID vaccine is a bust, that'd be awful. If stimulus hopes don't happen, that's a big deal. If the U.S. goes into a shutdown, that's a big deal, right? These are all things that would really hurt the momentum that we currently see or the current prices at these new historical highs. Two more things there, Airbnb and DoorDash. Those are big IPOs coming this week. I believe Airbnb is on Wednesday and DoorDash is on Thursday. I read some interesting stuff on Snowflake, the cloud-based IPO that was a couple months ago. It's up like 300% for the year, which is crazy. And then you also have your special acquisition companies that are doing quite well also. So that's what I'm focusing on this week. Like I said, it's news, right? It's fundamental news. It's what's going to help us kind of create the commentary, see where the markets are moving because of this stuff, but it's important to follow price action, all right? Now, we're going to go into the charts. We're going to talk about some setups. Understand there's risk in trading. Please and always use trade capital only. You know the deal. If you're following me out there on social media, if you like this video, do me a favor, click that like button for me, subscribe to my channel, and click the notification bell so when videos like this come, you will be notified, and I will premiere this on my YouTube channel. All right, so that's YouTube, Facebook, Twitter, and Instagram. I also posted a video last week on my best trading strategy. This is my Keep It Seriously Simple video series. I did one on harmonics and harmonic alignments. This week, I'm going to be working on one on the currency strength tool that I use almost every single day. In fact, I'm going to show you that right now. So this is a currency strength chart, and this is also showing where I'm watching pound crosses. So as an example, and in fact, this would be a great way to start the video, so I'll save that and plug this in. Take a look. This is what the major currencies are doing through the day. Now, you can notice here that this was around 1:50 a.m. Eastern time. Now, that is around, we'll just say 2 a.m. Okay, 2 a.m. Eastern time is the Frankfurt Open. So that is the German Open. 3 a.m. Eastern time is the London Open. Look at the type of volatility that we saw immediately taking place with the pound. Now, up in the top right, you see the different currency pairs based on the colors. The green represents the pound. So that is the sterling. That's the Great British Pound. At 2 a.m., immediately started to drop. We started to see, from 2 a.m. to 2:30 all the way through. I mean, this was a low point around 4 a.m. So we had an extremely aggressive 2-hour open today on the pound crosses. Again, Brexit news likely spurring this movement. Now, has the pound made lower lows? No, but you can see in price, and I'll show you in a little bit, where did the pound go? It was incredibly weak for 2 hours, and then we started to stall. We started to claw back a little bit. Everything else pretty much stayed as is. We see that the dollar was stronger, the yen was stronger, the Swiss is getting a little bit stronger. Everything's kind of fading back towards the baseline. This is the CAD that has progressively gotten weaker through the morning. The Aussie was somewhat weak and is starting to claw back a little bit, but the pound is the outlier. Super, super weak throughout the morning. What does that look like on a chart? I will show you. Here is the pound Australian dollar. Take a look at the chart. I'm going to go into a 1 hour chart so you can see how that opens up. Look at this. This is crazy, right? So this is 2 a.m. Eastern time. So, this is the middle of the night for me, but I've spent many of years, again, anticipating high volatility and trading this setup. So 2 to 3 a.m., 3 to 4 a.m., what's interesting is from 3 to 4 a.m., that was where all of the aggressive movement was going. So one thing I will discuss this week with all of my followers, discussing with my traders in my trading room, is that I might make a little audible here, okay? And instead of using my typical 3 to 4 a.m. structure, what I will probably use instead is 2 to 3 a.m. structure. And that's 2 to 3 a.m. my time. That is 7 to 8 a.m. London time, and it is 8 a.m. Frankfurt time. The reason that's important is because if we see aggressive price action from 3 a.m. to 4 a.m., we should capitalize on that. So this was an open here at 80, we'll just say 8020 with a low at 7915. That's 100 pips in an hour. Now from the high overnight, which is around 80.80, all the way down to 78.60, that is over 200 pips of movement on the day. And within an hour, you have about half of that movement. So my little audible for the week, and I'll explain this in my Flex Trading Room Tuesday, Wednesday, Thursday, is we'll be looking to trade this around 2 to 3 a.m., use that 1 hour candle and trade the breakout of that candle. So it's my 1 hour price, and then I'm going to go down to a 5-minute chart and look at my structure. So it's going to look something like this. I've done videos on this. I talk about this all the time in my trading room. This would be my low of the hour, and this would be my high of the hour. And what I'm doing is when I have that blocked in for my 2 to 3 a.m. candle, I take this now down to a 5-minute chart. Where's my 5-minute chart? There it is. Here is my zoomed in 5-minute chart, and this is a break right at the 3 a.m. open. Now, understand that this is a high volatility move. So if you see, and I'll just give you the strategy. Look, if you see that we have a breakout right here, we are taking a sell trade, and we're putting a stop loss right above that break. Okay, now if price is going to immediately shoot all the way back up inside this range, we're going to take small losses. I do not hold trades with this strategy. If I'm wrong and my price action reverses on me, I need to get out of the trade as quickly as possible and cut that loser off very fast. But if it goes my way, which we have that breakout right there at 3 a.m., which means from 3 a.m. to 3:05, there's my confirmation. If I took a sell trade right there at 7992, what do we have for the next several minutes? 5 minutes later, indecision. 5 minutes later, you're in profit. In fact, you're up by around, that is 92 to around 64. You're up about 30 pips. Okay, how about the next 5 minutes? Some more, the next 5. So within about 5, 10, 15, 20, 25 minutes, you are up around 60 pips. That's pretty good. Okay, for the amount of effort that it takes to wake up here, this would be, like I said, my audible is going to be, I'm looking to trade right around the 3 a.m. open. And if the 5-minute price action confirms that, takes a break, I'm looking to sell this. That's 60 pips within about 20 minutes. That's awesome trading. Okay. Now, does it go lower? It sure does. You can start looking at using stop losses. The stop loss goes here. When you're up 30 pips, you can go to break even. When you're up 60 pips, you can go to plus 30. I mean, you can use your stop loss to the best of your ability and trap your profits. We end up having a low right around here at 79, which means we had about 90 pips of opportunity this morning on the pound Aussie. Now, this is just one currency pair. The reason this is really cool, and this is an easy strategy to follow, is number one, we have to know that there's decent volatility. And likely this week with the negotiations between the UK and the European Union, there will be. So let's take a look at this pound Aussie. We just did that. Let's look at the other crosses. This is one currency pair of 7. Okay, so if I'm going to trade this strategy, if I set up my charts and I have all of my pound crosses, the one very cool thing is if the pound is excessively weak or the pound is extremely strong, the pound crosses will all move the same way. So pound Aussie will move the same direction, very likely, as pound CAD, pound Swiss, pound yen, pound New Zealand, pound dollar. The one that's going to move the opposite is the euro pound because the pound is the secondary currency. So pound Aussie, you can see that it moved down. Pound CAD, you can see that it moved down. Pound Swiss, you can see that it moved down. Pound yen, you can see that it moved down. Pound New Zealand, you can see that it moved down. And the pound US dollar, you can see that it moved down. Now, yes, it moved down and has come back. Well, I don't care. I'm not position trading this. I'm looking to trade the short-term volatility. All right. So if I have a short-term move from 3,400 all the way down to 3,200, that's 200 pips of intraday opportunity for me to trade. Right? So this is a trade that, again, if you're in it, it probably took you 30 to 60 minutes to see some really decent profit. The breakout was very straightforward. Right around that 3 a.m. open, the London session is providing some aggressive volatility. It doesn't matter to me that we had all this movement and then it came back. What matters is this movement is volatility that we can profit from as long as we're moving stop losses to break even or better. So when you have 60 pips of profit, when you have 100 pips of profit, do something with it. Right? A break even trade here is not going to satisfy my profits, right? Going to break even and seeing it go, down 100 pips in my favor, back up to where I started, that's frustrating. And also getting greedy of, well, it went down, it went back up. Should I trade it both ways? No, just take your profit and go trade tomorrow. Quit while you're ahead. So the good thing is we expect volatility this week. I'll be following those pound crosses with this strategy very closely. Like I said, for everyone that, following, that's heard me talk about the strategy before, my modification is going to be I'm using the 2 to 3 a.m. Eastern time candle, which is the same as the London 7 to 8 a.m. So wherever you are in the world, if you base it off of that, 2 to 3 a.m. Eastern time, 7 to 8 a.m. London time, that's what I'm looking to trade outside of. I want the breakout after that candle closes. All right, here's the euro pound. You're going to see the euro pound go up because it's the opposite of those other crosses. So pound weakness means the secondary pair goes higher. So this is the big breakout. There's 2 to 3 a.m. There's 3 to 4 a.m. That's a pretty big jump from 90.60 all the way up to 91.40. It's about 80 pips on the euro pound. Okay, good stuff. All right, let's go into the indices. Here is the SPY. Let me go to the daily chart. You can see that we're making fractionally higher highs. Now this is the big run post-election. I've talked about this now for the last month. We're officially, 4+ weeks outside of the U.S. election. Going into that, we had this support structure from September. We rallied on what? Stimulus hopes, I guess. Vaccine hopes, sure. We're starting to keep the party going. The path of least resistance right now is bullish. The S&P is breaking out higher. Okay. Even though I see that, wow, look at that, we have higher highs in price and we have disagreement in momentum. Fine. It doesn't mean I'm calling the top, right? In fact, I would not be calling the top unless we see price dramatically break down. And so if all of a sudden the bears show up and they close back inside this post-election gap area, then I would say, you know what, maybe we're putting in that divergent top. We're going to have a little bit of a scare going in right now. Or maybe all the optimism, all the good things are getting priced in, and then reality sits in, right? So this could be the classic buy the rumor, sell the news, buy the rumor, sell the fact. But right now, I think that it is easier for the holiday markets right now to keep drifting higher. The bears are not active. This is a bull-dominated move right now with lots and lots of money that's been on the sidelines just holding, right? And even buying at these levels where it's like, hey, everything's going to turn for the better, right? Fine. So right now it's still bullish. There's the S&P breaking out to the upside on the SPY. If you look at the DIA, that's going to reflect the move on the Dow Jones. Again, marginally higher. The big number for the Dow Jones was 30,000. We're currently trading at 30 and change. This is 30,111. We're above the 30,000 mark. Okay, so here it is. Unless the structure all of a sudden turns crazy bearish, I would say, you know what? This breakout from September's highs, this becomes important support. If we fall back down here and it stays there and it bounces, we still have support and this bull market keeps going. That could be a dip. If we start to break back down, right, we have this massive gap from right there. If we fill this gap and we show indecision, then it's anybody's game. The bears might actually take over this near-term direction. Or the bulls might say, hey, we filled the gap. Great job. Let's form a higher low. Let's keep going and try to target those highs. But take a look. We have higher highs in price. We have disagreement. Okay, so that's why I'm cautiously bullish. This could be drifting. Maybe this runs until the end of the year. Maybe this runs until early 2021, and then we all of a sudden start to see a reality check in January. Okay, So we still have some election stuff. I actually didn't talk about that because it's not until next week, and then swearing in a new president or the same president as of January 20th, I believe, of next year. So Dow Jones is still bullish. How about the Nasdaq? Okay, Nasdaq is carving out slightly higher highs. There's the September high. We are above that. Nasdaq is still carving out gains. We have higher highs in price. Obvious disagreement in momentum. Doesn't mean I'm calling the top. So please don't tell me that we have to have a bear market when we can watch this thing for the next 2 to 4 weeks. Stay bullish. And not just stay bullish, but I'm talking about another 5% to the upside, another 10% to the upside. If we have 5 to 10% in indices, there are stocks that will continue to stay very bullish, and most likely, as many stocks can do, they will outperform the indices a ton. So if you have good stocks running and they're in profit, move those stop losses to trailing stop losses, let those profits ride, and see where they go. All right. And then eventually we'll line this up where if it's going to break down, we will start looking at price action. If it stays here, it drifts, and then it shows the signs of confirmation. Now we can start talking a bit more about a high in place or a top in place. Okay, the one thing I'm also watching is the VIX. It's interesting that we're seeing higher highs in the SPY, higher highs on the DIA, higher highs on the Qs, but the VIX, meanwhile, is coming off of the lows. So we're at $20 support. We have major support all the way back down here to the last, 7 or 8 years of price action, 12 bucks on the VIX. So at $12, that's where I am definitely buying, expecting at some point in the next 1 to 3 months, lots of volatility. But what's going to be interesting is as we got into the election, we had this higher high right there, higher low rather, and it ran up. We had the kind of the nervousness and anxiety going into the election went higher, but then we got smashed back down as the market decided to rally. So I stand by this. I think that $20 support is really critical. I think that if the markets keep eking out these slightly higher highs, it may suppress volatility once again, coming back into these levels. But between $20 and $12, I am a buyer on volatility because I think we will get back up into 35. I think we'll make a run all the way back up into 40, and we might see some of these bigger pops. We go from let's say 20 to 40. Okay, or 12 to 40. We'll have some higher volatility, some more sustained volatility in these stock markets. So I'm still long volatility, and hopefully this pays out really nicely before the end of the year. Otherwise, I'll roll that over into 2021. Okay, certain stocks that I am interested in, I'm still following the big ones. I'm following some e-commerce giants. I've talked about this in a couple of my classes, my Trend Seeker Pro, my high octane classes. I'm looking to buy, companies like Amazon, Microsoft, Google, Facebook. I'm probably going to stay away from Facebook. Tesla, unbelievable. Like 100,000 cars recalled. Consumer Reports labels their cars as unreliable. The market doesn't care. It's just like Tesla can do no wrong. So I don't know what the deal is other than don't be short Tesla. I know that short sellers have been absolutely crushed multiple times over. It's probably not worth shorting it. Anything else? I'm bullish right now, and it's short term, right? It's short term. Like give it the next couple of weeks, give it till the end of the year. Let the Santa Claus rally have its time. I guess one good thing to celebrate for 2020 of the very slim things to be happy about, that would be the fact that if you had the courage and the margin and the cash to invest and trade, there was a lot of opportunity to be right with direction. If you bought anything in 2020, it was one of the easiest years. Now I say that, of course, like having the courage to buy. Obviously the reality in March was, oh my gosh, what is this? But the courage to buy and buy lows and buy the falling knife essentially has paid out a ton. Now it's not paying the same for everybody. We've obviously had some disproportionate recoveries on stocks in different sectors. But the reality is, for the most part, I'd say anybody that's traded stocks this year has done extremely well, to the point where Wall Street hates Robinhood traders, Webull traders, everyone that's got a phone that's buying stocks or stashing money and rounding up their purchases just to put money anywhere because the stock market's going up. Every company is recovered and recovered a ton. I mean, there are probably more 100+% rallies that I've seen this year than any other year I can think of over. I mean, I've traded stocks for 20 years, Forex for 12. It's crazy. But it doesn't mean it's going to go on forever. It doesn't mean that this current trajectory and this growth is sustainable, but take advantage of it. And if you did, hats off, enjoy it. It's still a good time to learn how to trade. It's still a good time to know what is coming next in case we have an ugly downturn. Like, how do you weather the storm? How do you survive something like March and actually profit from it? and how do you use that opportunity, that excess cash and those profits to make yourself more gains in the future. So I'm going to continue to ride out some of my stock profits with those trailing stop losses. In the currency world, I'm really just focused on, I'm watching the dollar really carefully. The dollar has had, even just today's candle has been a pretty solid rejection. We came right back up to this important support. We broke through it. The dollar is starting to register lower lows in price. It is registering divergence. That doesn't mean that the bottom is in. But one thing that I'm watching really carefully, as the dollar is probably going to continue to slide lower towards these 20, this is 2015, this is 2016, this is 2018. The dollar, if it's going to continue to stay bearish, then we settle back into these 2015-16 lows. If it stays bearish all the way back into 2018, that is a line in the sand unlike any other. If the dollar holds these levels, then we have, a massive upside and most likely a lot of range trading in the longer term to look forward to. But one thing that is pretty ominous is if this is in fact a double top on the dollar, if that's a high and that's a high and we break this low, then we're talking about a big, big, big move to the downside where the dollar has not seen this type of sustainable trend since 2014. And if it's going to completely set this thing back into 2014's rally, and I remember that because this was when we transitioned from low to high volatility. I remember that it was August 2014, right? And the dollar just went nuts and volatility was crazy. So here's what's going to be really important. We may see a dollar slide, but we have a lot of evidence that this dollar is supported, and there's going to be some fair market trading in here where things start to recover. There's still range trading throughout the markets. If the dollar is just going to get absolutely destroyed, we're going to come down to these lows, okay, and either use this area to still push lower, or we have lows forming, one more move to the upside, and then this dollar is going to get hurt even more over the next couple of years. All right, so there are going to be some wave structures in here. There will be some Fibonacci's we watch. There are some major support resistance levels we watch. But right now, the dollar's registering near-term oversold conditions, extremely oversold, divergence, all that good stuff. Where, again, tops and bottoms do form. Typically, I like to see some highs and lows, tops and bottoms forming in December and January. April, May is typically a transition month, as well as August. So it makes sense that the trend right now is going, holiday trading is upon us, and as the dollar index slides a little bit lower, expect this euro dollar to stay bullish. I told traders last week, we're up above 1.20. There is really not much stopping this until 122, 122.50, and realistically to this high, that's 125. So we could see, the opportunity to buy any type of dip, 2130, 2140, 2150, looking to buy some dips, take this thing this week into 2200 or higher, right? And even if it pulls back to this level, if it pulls back to 1.20 and maintains that support, there's your chance to buy this and take this up into 122 and 125. So I still like euro dollar long. I still like New Zealand dollar long this week, and I still like dollar CAD short. So New Zealand dollar also looking long. Dollar CAD, we've essentially just taken the breakout below 1.30. 1.30 is now up over 200 pips. Let it go. Let it run. Keep looking to re-enter. If you get a pullback here and then you take some entries on some resistance, you can sell those resistance, sell those pullbacks, and look for those bears to score more points. I think that we're falling down into this 27 and 2600 level. We may come all the way back here again. Look at these major support levels, 2016, 2017, those levels around 1.25. So could we see this sliding lower right now to find some support? Sure. And then we're probably going to make a little recovery here. And I would say that the dollar is looking to head lower. So if there's some serious wave structure, then we're going to have a recovery on the dollar. If this is a, just path of least resistance, run this dollar until it's completely oversold, then this becomes one of the, great recovery trades and retracement trades into next year, right? But right now, I would say if the structure is bearish on the dollar CAD, stay bearish. So I'm using 1 hour charts, 4 hour charts, maintaining that trend posture. If the dollar is bullish on the euro dollar, New Zealand dollar, stay with that trend right now. I'm currently long on dollar Swiss, and I'll show you. I'm long on dollar Swiss, and I know that there are some really important levels here around 88.50. We may come back into, this is 2014 and 2015. Could we come into 8,700? Could we come back into 8,400? Sure, we could. So I'm trading this whole area very small. There's a fantastic level that I want to get back to on the dollar Swiss at 93.50. Look, I know that my bottom is not exactly right. I called this thing around like 9100, 9000. I told traders that I'm going to be buying it again at 88.50. I'm going to buy it down here at the lows off the Swiss National Bank flash move in 2015. Right? And if I buy small and it comes back up to 93.50, if I, work my way through some trades and it comes back to 93.50, I will make money on dollar Swiss. So my trade size and my allocation is very small, but I'm essentially just trading it as is. I'm, getting some positive rollover, negligible, but whatever. So I'm long on the dollar Swiss. But meanwhile, I'm also long euro dollar. So that's a bit of I can be right on euro dollar right now. I can stay patient on dollar Swiss and make money on both. I'm looking to continue to stay long New Zealand dollar towards 71.25 and also this pocket around 7,200, maybe even upwards into this 74.50 to 7,500 area. Okay, do I expect there to be a pullback? Sure. If we zoom in on this daily chart, we have higher highs in price. You can see that higher highs in price have not translated into momentum. In fact, we're starting to see that the momentum is shifting. So divergence is there. But if it's easier to keep buying the dips and take this thing higher, I'm long New Zealand dollar. I'm short dollar CAD. Okay, dollar yen, I have some sell trades running at 104. This one is, I really just hope this thing just makes up its mind. We've been watching this thing range from essentially 104.70 down to this low around 103.60. If we break this level, I hope we just keep sliding lower. Major levels from this year are 101.20. The critical number is parity at 100.00. So if we can just officially make some fresh lows on dollar yen, then I think this one continues to slide. But the dollar and the yen have traded essentially together. So we're seeing that, risk on or risk off trading, they both pretty much stay together, and it's tough to see the dollar or the yen come unglued from one another. So it's a tough one. It's really just a big range. But this is one thing to watch. If it's not good trading now, I'm currently short at 104. If it's not great trading now, it should turn into better trading later. And whether that later is a break here and a continuation, or whether that is a break here along with all of this corrective behavior and the dollar yen starts to make this massive recovery. So I hate the dollar yen. I'm really skeptical on yen pairs in general. But when we see periods of consolidation on yen crosses, they are setting up for some big, big, big moves. And this is exactly that. This big shakeout from March to April, all of this has been range bound, correction, choppy, lower volatility. I think eventually this is going to be, hit 101, go all the way back up to 111. Or if it doesn't hit 101 and it doesn't hit 100, don't be surprised if it just makes a sneaky little breakout here, runs to 111, and then comes crashing back down to 101. There will be a big move, I think, in the dollar yen. I'm hoping that's the case, and I'm looking forward to trading it. But it is requiring some attention, and we just keep kind of focusing on it, identify the structure, and make sure that we're just acknowledging what we see and trading it accordingly. Okay, so that's pretty much a Forex overview. Like I said, stock-wise, protect those profits. I'll continue to send out those screenshots for my bull and bear scans for TrendSeeker Pro, trying to find some good stocks this week. We have IPOs on Airbnb and DoorDash. I'll be interested to see where they open. If there's a chance to play them, I will. Do I believe in both of them? I mean, DoorDash is pretty awesome. I know they're being super aggressive. I like their business model. I also think that DoorDash is not just going to be about food. Okay, that would basically be Grubhub. But DoorDash is looking to be like a delivery service for everything. And if they do that, then I do think that DoorDash is a pretty solid play. I'm always skeptical to just jump in and throw in money at an IPO, but I'll play some price action. But I think DoorDash is pretty promising. I believe that's a Thursday IPO. And then Airbnb. I like the business model. I know that it's probably more common for me to hear, friends, relatives, people traveling doing a VRBO and an Airbnb more so than your traditional hotel. So that's pretty cool. Again, I'll watch some price action. I just hope it's not just, unicorn money, throw it out there and just see prices that make no sense. Does DoorDash make money? Does Airbnb make money? Are they good? Are they good companies? Is there tons of competition? That's the due diligence, right? So there's always stuff to read up on and make sure that, investment wise, make sound investments. Allocate your capital properly, good sound equity management. Trade is a trade, winners or losers. We have lots of them. But as long as we keep trading, survive the next day, keep grinding, that's what we're here to do. Okay, it's going to be a busy week. All right, I do expect, the news that's lining up this week, we've been kind of waiting around for this COVID vaccine stuff. We've been waiting around for a stimulus plan. We've been waiting around for now government shutdown. If we can avoid all that, I'm sure the market's going to take that in stride and just keep kind of pushing things higher, but cautiously higher. Right? I keep saying that. So good volatility around the pound crosses for Forex this week. Watch the dollar index. Watch those pound crosses. I think that will provide some really good opportunity this week. And I'm looking forward to seeing everybody in my trading room. Again, appreciate the comments. Leave me some feedback. Like the video, subscribe to the channel, and have a great week, traders. We're coming into that home stretch. Make sure we finish the year strong. I'll see you soon. Take care. Bye.